Borchardt, and this is your Marijuana Money Minute. As you can see behind me, the MJ Biz conference is happening this week. It's the biggest marijuana conference in the country. There are 25,000 people attending this conference here in Las Vegas. But the biggest news this week is that Acreage Holdings began trading on the Canadian Securities Exchange using the symbol ACRG.U. It's .U because even though it's traded in Canada, it's using the currency of the U.S. dollar. The shares were priced at $25. The multi-state operator is now in 17 states and they're valued at over $2 billion. Acreage hasn't released any revenue projections and instead would like investors to focus on their extensive footprint. Acreage wasn't the only company to begin trading this week. MJardin acquired Growth in a deal valued at $275 million, and the company began trading on the CSE. Their symbol is MJAR. They project they'll bring in $162 million in revenue in 2019, and in 2020 their estimates are for over $325 million in revenue. Think that's it for new cannabis stocks trading on Thursday? Well, you are wrong. Harvest also began trading on the CSE on Thursday with the symbol HARV. Now, this multi-state operator is in 4 states, but they have licenses for 11. The RTO has brought that company's capital raise to $218 million. Now, the stock priced at $8.67 Canadian, but it opened lower at $5.50 Canadian and then closed at $7. We also had some big earnings this week. Canopy Growth fell after the company missed analysts' expectations. The company reported its second quarter fiscal 2019 revenues jumped 33% to $23.3 million, but analysts had estimated that the company should have had revenue of $60 million. That's a big miss. Tilray stock fell after that company reported their third quarter revenue of $10 million this week. Now, this was an increase of 85% versus the same time last year. And the problem is the company said that their average net selling price was $621 versus last year's $753, so the prices fell, while almost all the other Canadian companies were reporting that their cannabis prices went up. Cronos Group reported a 186% increase in third quarter revenues to $3.8 million versus last year's $1.3 million. The gross profits, though, were essentially flat. Their net loss increased to $7.2 million Canadian dollars over last year's $1 million. Now, the net loss per diluted share was 4 cents versus last year's net income of 1 cent. And that's it for this week. I'm Deborah Borchardt reporting for the Green Market Report from the MJ Biz Conference in Las Vegas.